I'd like to call the Workers' Comp Insurance Committee to order, and I'll have Will to please call the roll. Did we call the roll? No, it's marked. Okay, so just marked attendance. Okay, so we're good. Okay. I'd love to have an amendment to waive the quorum, if I could have that. So moved. Second. So all in favor, please say aye. Aye. Opposed, the same. Actually, this is my first meeting as chairman of this committee. The only thing that I think Tom would want me to say is Ohio is one of the few states that has a state-run system. It really does. And so it's a lot different. So I plan to learn a lot from this committee. You know, I've been chair of a couple other committees in the past, and we move around all the time. So I really appreciate this and plan to learn a lot from this committee. If everybody will look at the minutes, and if there are any corrections or additions, if not, can I have an amendment? Or can I have a motion to approve the minutes? So, okay. And a second? All in favor, say aye. Opposed, the same. Okay, the first on the agenda today is the workers' compensation in the post-COVID era. The first speaker, we appreciate you being here, is Matthew Zender. He's the Senior Vice President of WC Strategy - Ameritrust North America. Welcome, Matthew. It's all yours. No, got to hit the button.
How about now?
Now you're there.
There we go. All right. Thank you. So it's a pleasure to be here today. As a form of introduction, I work for AmTrust Insurance Company. We are the 5th largest writer of workers' compensation in the U.S. We have about 320,000 policyholders in force and about $2 billion of premium. When I was talking with Will about subjects for today, I offered a historical view of COVID, and this is going to be from my perspective as an insurance executive. And the thought is that perhaps we have some lessons that we might be able to take from this. My son was just in Kabul, and he was in the airport when all that was going down, and when he returned safely, thankfully, I asked him if he realized how historically significant that event was, and he assured me that he did. And when I think about COVID, from a workers' compensation perspective, it was an existential event. It was an event that had many of us, questioning things at root levels and asking ourselves what this was going to mean. And so as we go through this, I'm going to talk about COVID, but from one perspective that's a little tired. We've been dealing with it for a couple of years now. So I'd ask you to maybe think about it through a lens of what this might mean for the next example that we're dealing with. So it can be illustrative from that perspective. And if you look at Warren Buffett's 2001 annual report, he obviously is a major insurer, and he was talking about post-9/11 events, and he said, I'm going to quote him here, he said, you might ask, didn't I recognize the above facts, such as, this is now me paraphrasing, for example, the probability of such mind-boggling disasters, though likely very low at present, is not zero, before September 11th. The answer, sadly, is that I did, but I didn't convert thought into action. I violated the Noah rule. Predicting rain doesn't count. Building arcs does. So as we go through this presentation, we're going to talk about, and I'm going to do it in pretty quick fashion here, some of the economic impacts and how the state responses varied, of course, the compliance efforts and those challenges that they pose to us. So putting a state-specific agenda through a national filter. Obviously, we write in all states except for Ohio, Wyoming, Washington, and North Dakota. Those are monopolistic states. We're going to dive into the nature and number of COVID-19 related claims and how the insurance industry responded, and then look at the reopening efforts and the challenges that those posed, both to the business owners and to the insurance community. So I think we can all remember, this is going to go sort of chronologically now. So this is back to March of 2020. I think we can all kind of remember where we were when we first sort of realized that COVID was a thing, and it was going to be something that needed to be dealt with differently. For me, I remember, I live here in Las Vegas myself, and I remember closing our office as we all transitioned to working from home, and the manager of the office looked at me and said, "I'll see you in a week or two." And I remember thinking, We'll see about that. And obviously, that office was closed for 18 months, as many were. But when we were looking at the needs of our insureds, we immediately transitioned to, okay, we've got hundreds of thousands of policyholders. How can we support them? And what can we do to leverage existing resources? So one example, we knew that we were going to have insureds that were going to have needs with payment terms. And some of this was directed by the states, and some of it was directed by our agents and our insured's needs. They were going to need deferrals, payment deferrals. They were going to need to endorse the payroll down, and I'll talk specifically about a couple examples of that. And so what we did is we transitioned our call center into, we gave them some authority. They did not have any authority prior to that, and we gave them authority so we could take an existing resource and allow that to be used for, thousands of policyholders' needs. One of the things that we noticed, I know that Assemblymember Cooley was talking about the agents a minute ago. These agents were less positioned to work from home than, say, we were on average. There were exceptions, of course. But and so we needed to create a mechanism to help support them in order to, as they moved into their work from home process. Each state had various requirements, and they were all different. So we needed to set up a framework that was going to allow us to make sure that we were properly responding to those state requirements. So we created a spreadsheet that was, it would take the incoming request, and then at first it was every couple hours, we would send it out to the field so we could make sure that if, a state, such as Arizona or North Carolina was asking for something, we could make sure that we were responding in fashion with what they were looking for. And then lastly, this is all still in March, we created some stress models. At AmTrust, we insure, for example, 21% of all the restaurants in the state of New York. All of those restaurants were closed. The National Restaurant Association was estimating that a third of those restaurants could close forever. So we had to create some stress models to help us, determine what is that going to mean on our book of business as an insurer. How are we going to be able to make sure that we can continue to meet their needs going forward? Into April, it was starting to become a little bit more solid at this point. I think we're starting to settle in a little bit. This is now April of 2020. And so at this point, we started to look at insureds, policyholders, and they were making some changes. I remember a dry cleaner contacting me, well, not me personally, but our firm, saying that their payroll was down 97% because they did all the payroll, all the dry cleaning in Anaheim and Disneyland was closed. So they needed some help. But other insureds were looking at what are they doing and how are they going to be changing. Hotels, many hotels, for example, were having to take on, they weren't taking on customers, so they took on COVID patients in many cases. And so we as an insurer had to ask ourselves, how comfortable are we with that change in exposure? We also looked at the impact on the policyholders' revenue and whether or not it was going to impact their view towards safety. The dollars that they were spending, say, to put up plexiglass are now dollars that they might not be spending to make sure that their employees are working safely. And we had to find ways to encourage them to realize that they aren't mutually exclusive. We also worked, there's a lot of shift mix that was going on as employees were now working from home. And in some cases, they were being fully furloughed, meaning that they were being paid to stay at home. And so various states were coming up with different mechanisms to help us realize that payroll. And in some cases, that payroll could be just noted as zero. And we had to set up the mechanics to be able to respond to that. And additionally, we had to make sure that we had the tools and analytics to help both our insureds and our agents, and frankly us, thrive during this period. Now we move up to May. And this says, these are the notes that I was taking at the time, right? So I was recording these notes as we were going through this historical period. And I wrote down businesses are starting to look towards reopening. That feels a little optimistic now, considering this was in May of 2020. But, even then I wrote, as the businesses start to look towards reopening, will they be able to find employees? I have a friend who's a contractor, and, he had received a PPP loan. He tried to get his employees to come back to work. even on a furloughed basis where they'd get paid to stay at home, and they were rejecting them. They wanted to stay on unemployment because many of them had figured out sort of the dislocation between the federal and state unemployment programs. So, as they were working and struggling to find employees, I will tell you that's a theme that's continuing today, and I'm sure it's continuing in Ohio too for you. We have so the impact of the PPP and all this was absolutely a thing. In May, the compensability presumptions started to roll in. We saw them, in states such as California, Illinois, New Jersey, Kentucky, and they varied, and we had to make sure that we were looking at those individual state requirements and making sure that we were handling them in strict accordance with the intent of those state requests. And we also then spent a lot of time as an industry asking ourselves, what the heck does this even mean? And we started to see industry estimates with numbers that had B's in front of them in terms of the impact of COVID. There was one estimate that had the spend as much as $80 billion. Now, the work comp industry as a whole is around $40 billion. So just to put some context on that, they were estimating that the total spend of making COVID compensable could be twice as much as the annual premium collected. There was also around this time period, this is still in May, where we had some employers starting to get really concerned about employers' liability and Part B. I think most of you in this room would understand that work comp is an exclusive remedy where, they about 100 years ago, they gave up the right for tort action in exchange for a more estimatable and reasonable pay structure. So some people had a sense as to whether or not exclusive remedy was going to be under attack. And businesses were asking themselves, there's all of these regulations and all these things I'm trying to understand. What is my standard of care? How can I make sure my employees are safe? And so we, as an insurance carrier and many others, tried to put out a bunch of information to help them, sort of navigate all of this and make sure that as they opened safely, they were, not exposing themselves or their employees. Now into June, we had some moratoriums that were being lifted in terms of whether or not we were now able to cancel a policy. Up to this point, we hadn't canceled a single policy ourselves, and in fact, in many instances, had returned quite a bit of premium. In California, for example, we returned $38 million in endorsement payroll back to our policyholders. That's just an AmTrust figure, and I know many other carriers did the same thing. So now we were looking at a situation where they've received maybe some PPP loans, they've evaluated whether or not their business model is going to be able to change, and they were asking themselves, whether they want to continue to stay in business. And so we started closely tracking the ratio of cancellations and endorsements and making sure that those weren't getting well out of bounds. We also saw businesses that started to completely change their business model. I had a couple of examples here. I had a lacrosse manufacturer that started making masks, and they quadrupled their payroll because of a government contract. That's great for them. It's a success story. We had a whiskey manufacturer that changed into making sanitizer. Yeah, and that's a great example of somebody pivoting quickly. My son was graduating college around this time, and we wanted some barbecue food, and I went to the barbecue place to pick it up, and they had probably 100 orders of takeout listed there. And I told my son, I said, I don't see them going back to an in-person dining situation anytime soon. So as they changed their model, we had to ask ourselves, how comfortable are we with that? Are we comfortable with a restaurant that's doing mostly takeout? Does that change the way that those employees are going to be impacted? And from a behavioral perspective, I could go into this for a while. I don't have time to, but basically the macroeconomic dollars were flowing differently than we would have expected. There was a study that showed that 49% of the total reduction in spending came from households that were in the top income quartile, whereas only 7% came from the bottom quartile. And put another way, the top quartile reduced their spending by 13%, and the bottom only reduced it by 4%. And so what that meant is businesses in some of the more affluent areas were actually at a greater risk of closing than a business in a more lower economic area. And so we had to ask ourselves, what does that mean for us in terms of how we're feeling about those businesses and how we can support them? In the third quarter, we started to see, some reclosings, and the moratoriums came back in. Many states told us that we were now unable to cancel those policies or to do anything with them, and perfectly fine. We understood our obligation with that. We just had to make sure that we were keeping in concert with what the requests were. And again, that wasn't always the easiest thing when you had, 40-odd states sending in differing requirements. So we just had to make sure that we kept our procedures in place to respond properly. And then, frankly, around this time, we started to see some policyholders who understood the economics of their own situation and were perhaps deprioritizing their insurance spend. And so we had to ask ourselves, they knew that they were under a moratorium, so they knew they weren't going to get canceled, so they weren't going to pay us. And we had to ask ourselves, okay, well, how do we balance our compassion for their plight versus perhaps in some cases, and I'm not suggesting that this was a great percentage, but in some cases, there were some insureds who were just being opportunistic about their current situation. And so we had to make sure that we were just evaluating that. And additionally, the last bullet talks about drawing from the well, and we were trying to find ways to support our agents during this time because we found it was very difficult for them to find new opportunities. So we looked to find ways that we could help support our agents through this and helping them to grow. The fourth quarter, and I'll show a slide in a second here that illustrates this, the fourth quarter clearly was seeing the spike in claims. And so this is, throughout the fourth quarter of 2020, we did see many businesses close around this time. Many of them said, all right, I tried the first time around, I worked through the PPP, the second wave, too much. I heard from a restaurateur who said, look, my business model contemplates 100%, 7 days a week, and that's, first off, he said that's just not a successful business model. I should be able to be profitable at, say, 80% occupancy. But he said, look, even though it doesn't make any sense, it's just not something I'm going to continue going forward. And then the other thing that we were looking at was we spent around this time, energy into whether or not the stimulus was going to happen and whether that stimulus was going to move from the personal stimulus into crack the veneer, as I say, of small businesses. So then, fourth quarter 2020 ends and we're getting ourselves ready for 2021 and we're like, sweet, we're done with that year. And then 2021 said, hold my beer. I think I've still got some stuff for you. So, then we're looking at, what just happened here. And premium movements were continuing. We talked about, first off, I think all of you know that work comp is payroll exposure based. So it's all, as the payroll moves up and down, our premium does as well. And, we saw, at this point, we're starting to get payroll audits coming in. So payroll audits, all policies are subject to an audit that just reconciles the estimated exposure to the actual exposure. And at this point, we were starting to see some of those flow through and get some sense as to the depth of, how low was during, say, March, April, May. We had to find a way to help support them. At this point, too, we saw COVID-19 claims starting to come in, and I'll show you in another slide how many we saw. But one of the things that we noticed was that as these claims were coming in, we needed to standardize our approach. So we created, a COVID unit, so these people were only responsible for handling COVID claims because, again, each state had different approaches, and we wanted to make sure that we were acting in accordance. From a loss data standpoint, we started to see the claims trickle in, and it may be a little hard for you in the back to see, but just focus on the spikes. The first one you see on the left is June and July. These are California numbers, but nationally they track fairly similarly. June and July, you'll see the first spike. That was when the compensability presumption started. That was when COVID was now a thing. That could be a work comp claim. And I think most of you may know this, but for the first 100 years of work comp, airborne claims were not a thing. And so this is why it was such an existential thing for the workers' compensation industry to sort of wrap their head around. Since we had never had airborne claims in the system, that's why some of these estimates were as large as they were. The second spike you see is the fourth quarter of 2020. So you'll see that big spike in December, and we had 44,000 claims alone just in December of 2020. And then it dropped in January, But that's where the real spike was. That's when and if you look at the infection rates, it follows a very similar pattern. So the number of claims that were coming in absolutely worked in correlation to the infection rates within the system overall. And then you can see, it's been fairly low since then. In total, there was, about $260 million in claims that came out in California alone, but the average cost was about $6,000 a claim. We were just talking about that over here. I mean, the claims were either very large or very small on average. So now that we move into the second quarter of 21, we get into some issues that persist to this day, including, where do all the employees go? And the shortage really is affecting a number of industries. And at this point, we started to see wage growth that was clear. The wage growth was up during this period, but it was confusing because if you look at it, it really reflects shift mix. 80% of the lost jobs were amongst the low wage earners. And so the people who had greater paying jobs were generally unaffected. The people who had lower paying jobs were absolutely affected. And so that has an impact on our book of business as we look at shift mix and the likelihood of, and that factor is actually generally positive for in terms of the frequency metrics within the workers' compensation space. And we also talk here about, I have a comment about how do we keep energy levels up, and frankly at this point it was becoming a bit of a challenge. In the third quarter of 21, the picture is starting to come a little bit more into focus. Around this time, the estimates started to come out in terms of 2020, and they had a combined ratio of 85%. Combined ratio is the most commonly used metric to determine profitability. So on average, that means for every $100 of premium collected, we had about 15 points of profit on that. So 2020 was clearly not the end of days as it had thought to be at one point when we were first asking ourselves what this was all going to mean. We saw that premiums declined, so that makes sense, right? Because of the shift mix and everything else that I was talking about before and the number of people who just simply weren't working. But the strong combined ratio reserve meant that the industry actually increased their reserve redundancy to $14 billion. That's an industry number. And that last one talks about, I have a typo on that, forget that bullet point on there. That really was talking about inflation and what we were seeing happening with inflation. And inflation absolutely affects the workers' compensation industry. And that is continuing to this day too. So the last slide here, and then I'll turn it over, but this is sort of looking into the future. And, I asked myself at this point whether the finish line is in sight or are we still standing on the starting line? And frankly, that was a very reasonable question for a lot of periods during COVID. I think it's, I think we're feeling closer to the finish line now as I asked myself the question on March 4th, 2022. But we also talked about how we can facilitate ease through technology. So during this period, for example, we weren't able to have any contact with our policyholders. We couldn't meet with them. We couldn't do a premium audit in person. We couldn't do loss control in person for obvious reasons. But there were some lessons that we learned through this. There were some things that we were able to do through technology that allowed us to actually have connections with our insureds, and it worked out fairly well. I talked about the claims being fairly minor. And then lastly, just, science tells us this will not be an isolated event. So from our perspective, from a workers' compensation perspective, we now know that this door is open. We now know that workers' compensation does contemplate airborne diseases in this particular example. So the question that we have is, what's our role going forward? How is that going to continue? Does it become something that is, baked in as an accepted cost of the industry? Or is it something that COVID gets treated as a true anomaly? These are questions that are still definitely to be determined. And lastly, before I turn it over, and this is, I think I'm legally required to do this as a resident of Nevada, but I think it's a little curious considering this group here, but I think every resident of Las Vegas is supposed to say that you're now supposed to go make some bad decisions. So so I'll turn it over to you, Doc.
Yeah, Matt, thank you, Matt. And I'll ask people to hold their questions up before Doc speaks. So I now want to introduce Monica Verduzco Gutierrez, MD, Professor and Chair, Department of Rehabilitation Medicine, the University of Texas Health Science Center at San Antonio. Welcome, Doctor.
Thank you very much for having me today, and Chairman and members of the committee. I'm going to give you a different perspective of COVID-19, mostly about what's happening to patients and what's happening, what we expect to happen long term, especially long after COVID-19. So we're very happy, things are going down, numbers are going away, the disease is becoming a little less severe, but there's still millions of people who are living with the long-lasting effects of COVID-19, which can affect insurers and workers' comp payers and maybe friends and families. So I'll go over the terminology. Long COVID is what we talk about, the persistent symptoms and health effects after someone's had the acute COVID-19. So usually it is about 4 weeks or after that they consider it long COVID. Long hauler is the term that the survivors use and usually put on themselves. And then the NIH gave us the fancy post-acute sequela of SARS-CoV-2 infection. The CDC calls it post-COVID conditions, and again, defined by experiencing symptoms 4 or more weeks after. And the World Health Organization gave a more case description that I think is helpful. It's persons that had history of probable or confirmed SARS-CoV-2, because a lot of times at the beginning people were not having testing and didn't have access to testing. And then that within 2 months they develop symptoms. So it can occur that someone has COVID, gets better, and then some symptoms occur within the first couple of months, and that's still considered attributable to their COVID-19 infections. So there is so many different reasons why people continue to have ongoing symptoms after COVID-19. So hopefully, even for some people who are mild will have these ongoing symptoms long term. It has to go with inflammation. There's also cytokines that change, sometimes cytokines that you see in other states of inflammation, including people who have cancer or strokes. Autoantibodies, so the body may be starting to turn on itself because of the spike protein and the parts of the virus that are in the body. There is a persistent viral presence, meaning did it not all die off, and they've found places like in the GI tract where there's still some COVID remnants left, and this may be driving further disease. Mast cell activation, so something related to the immune system and patients still having an immune system gone awry. Dysbiosis means your GI tract goes off and that changes, and then also microclots. So who gets long COVID? And there's starting to be more and more symptoms. It doesn't just have to be people who are very severe. It could have been people who were at home and had mild disease. And I think they're starting to learn more and more with people who had maybe a higher viral, there's different higher viral load initially. Some people have had a history of Epstein-Barr virus, which is the virus that caused mononucleosis. Some of those patients, they actually have a reactivation of their mono, which may be driving the chronic fatigue symptoms. Some patients, it doesn't matter the age either, but some having certain infections before being overweight, having had asthma and diabetes was also a risk factor for who gets long COVID as well. And also having more symptoms at the beginning. So what does recovery look like for patients? What can we expect? And again, this is the worst picture, seeing someone that has very bad COVID lungs. And not everyone has to have the worst type of COVID lungs, but it can look different for every patient just depending on the course that they have. And I think the outcomes are different, just depends. Some people may have had silent and they've done really well. Some may have silent and still have long COVID symptoms. Mild, moderate might just be pneumonia where you weren't hospitalized. Severe are the people who end up being hospitalized. And then there's some percentage of patients who die. I think it depended on where you were. Currently, probably at the last surge, a 2% case fatality rate. So again, something that has to be considered for people who get it on the job or And then there is some patients that recover just wonderfully, some that have long COVID, and I think if you look at the data, anywhere from 10 to 50%. And then we don't know what's going to happen long term. This is a new disease, and just like they've found out recently, Epstein-Barr virus is the highest risk factor for someone to get multiple sclerosis, or people who had polio. Their post-polio syndrome didn't occur till decades later, so we still are not 100% sure what's going to happen long-term with COVID-19. We do know, it's definitely important to get patients rehabilitation. I'm a specialist in physical medicine and rehabilitation, so it's something that I've been authored in different types of journals with colleagues from 11 other countries where we said this is very important. If someone's going to be critically ill, that they be able to be hospitalized, taken care of as needed, and get the best rehabilitation possible, both in the inpatient setting, in the outpatient setting, and sometimes in a post-acute brain injury facility, because some of these patients also have something that looks very much like brain injury. That's my specialty before COVID came on, was taking care of patients with traumatic brain injuries, strokes, other catastrophic events, and some of their behaviors and their cognitive issues are very much like treating a patient with brain injury. We know that mobilization early on is important in the hospital, so they can even do it with patients who are on the ventilators or on ECMO, and it helps patients have better outcomes and get out of the hospital sooner. So, we try to do that as much as possible early on. There's been papers that show I'm very big into health equity and what happens to patients. And in this study, they looked at patients through the University of Colorado systems who had COVID-19, and the ones who were least likely to get rehabilitation consultants were ones who were Hispanic and who spoke Spanish. So again, more data just showing, these are the patients that they need to be covered for rehabilitation, and they need to be covered, whether that be their insurance or their workers' comp, or even a lot of them lost some of their jobs also. It's been very difficult. So we're trying to ensure, even with at a larger level, that patients maybe get their disability sooner than they did before. I very much fill out lots of disability forms for these patients who have lingering effects, because it's important for them to get more rehabilitation. So how frequent is this happening? I think if you looked at, in the US, they're saying something about 23% overall. If someone who had been hospitalized, 50% will have ongoing symptoms, and just different studies from different countries have probably similar numbers. In this paper, they looked at big data. So I like big data because 1 million+ patients who were who had a positive COVID test. Some were hospitalized, some were not. And they looked into the electronic medical record to see over the next 150 days how many of them were coming back into the system, what were the diagnoses that they had, what were the complaints that they had. And so patients who had tested positive definitely were coming back and using more resources in the system. Mostly, if they were older than 20 years old, they were having shortness of breath, fatigue, sleep issues. If they were less than 20 years old, so kids can have this as well, change in bowel habits, fatigue, shortness of breath, and then some anxiety and depression as well. And in the end, they said, okay, the percentage of this was only 11%. But I think 11% is really high, especially when you've considered that there's been almost 80 million people who've had COVID in the United States. That could be 8 million people who are going to be impacted, who can't go to work, who can't get their life back on track. So what are the symptoms that patients have? And this is they did a study, a systematic review. So they took all the studies looking at what were the symptoms after long COVID, and said the most common things are, it can affect, there's so many parts of the body that can be affected, 50 or more symptoms in this study, fatigue being the most common, and that's always difficult to really put on paper, to say how much that hurts people, because there's not often a test that's positive for someone who has very severe debilitating fatigue. I had one patient told me it was 100 times worse than when she had cancer. We can kind of understand how, cancer impacts people because of how is people either have had it or their family members had, but this person said it was 100 times worse than when she had cancer. They have headaches, attention disorders as part of the brain fog, the memory issues. They can't concentrate, and you have to have that to be a good worker. Hair loss, shortness of breath, and everything else that you can imagine. So what is happening in the brain? And they've done a little bit more studies and found that actually, even when first they started in mice and gave them mild COVID, and then they looked at it in people who were having long COVID symptoms and looked at the similar cytokines in their cerebral spinal fluid, so kind of did spinal taps in these patients, and found that they had abnormalities as well, and including with this CCL11 that was elevated, and that's one that's also elevated in chemo brain. So it's very similar, again, to a patient that may have chemo brain. A lot of patients can have cognitive sequelae as well. That's a big complication that, patients say, my brain fog's good, my memory's not good, I can't remember things, I don't know what word I want to say next. And we definitely knew that was a thing before with patients who had been hospitalized severely, but then now we're seeing that they did PET scans, and the PET scan shows that there's less perfusion to the brain, and then also they've found something, the type of signaling and what's happening to some of the proteins is similar to what happens in Alzheimer's. So this is what we have to deal with, and we're, continuing studies long term to see what's going to happen to people. And we treat them as, they need certain evaluations. They need to see neuropsychologists. They need to see brain injury specialists. They need to try medications. They need to get into brain injury programs because this very much affects the brain. And this one is also how it affects, it's multiple systems that are affected. So like I already said, blood flow to the brain, patients aren't doing good deep breaths, they're having pain, they're having tinnitus, which is weird buzzing in their ear that's sometimes very, very debilitating to patients, and inflammatory markers. And this was just, more testing showing the blood's not pumping the way it should to your brain. And your brain's the most metabolic part of your body. And so it's really important that you get your blood to your brain. In this study basically saying fatigue and cognitive impairment, that it didn't, and it was looking at 81 studies. So, it was going to be 32% of patients were still having fatigue at 12 weeks, 31% at 6 months, and it didn't matter if the patient was a mild case or a severe case. They were still having these cognitive symptoms and fatigue at 6 or months later. So we can't even judge on, okay, they were hospitalized, we understand it. There's some people that were not hospitalized, and they're still having long COVID. Again, psychiatric problems, sleep problems, anxiety, depression, and some of that is driven by neuroinflammation as well. Like I said, there's these inflammatory markers that are in our spinal fluid, and that can also drive depression and anxiety, which I've also seen in workers as well, and that's going to also impact their ability to return to work. Health equity is a big issue. I know that's important to everyone that's here and to ensure that everyone gets the care that they need. And so there's many organizations who are working on this, including my national society, the American Association of Physical Medicine and Rehabilitation. I'm taking care of patients. I've started 2 clinics in San Antonio, one of the first ones in South Texas. We take care of, some patients in our county safety net and some in our regular health practice, so I get to see the haves and the have-nots and be able to get patients back to work and try to get them back to work as much as possible. But they need to be listened to because, like I said, a lot of the tests can come back negative. A lot of the insurance doesn't cover some of these tests. If I want to give someone a PET scan, that's not covered. That's usually something they'll only do sometimes for cancer to look for metastasis. If I want to do an invasive cardiopulmonary test, that's also not done all the time. Again, just opened up the clinic because I wanted to ensure equitable care for these long COVID patients and, give them concierge type care, look at their physical, cognitive, and functional difficulties. And we treat everything from as severe as someone who's had a stroke and has had clots that have caused amputations in all their limbs to patients who are fatigued, can't walk well, have brain fog, or depressed. Our National Society has also worked on consensus guidelines, so of course we're working on trying to get these out so as many patients can be treated as possible. So both for fatigue, for breathing difficulties, for cognitive difficulties as well. Vaccinations, some patients, and there's probably a new study that just came out, and it's like, does vaccinations help patients? It definitely helps patients have less of a chance of getting a COVID, but even if getting long COVID, but even if you're vaccinated, there's still some risk of getting it, but the chance is probably half. And then some patients, if they get vaccinated, may actually improve with the vaccination because it might actually help their immune system. So it's something usually I'm still getting patients to try to get vaccinated because it may help them. Probably the next most important thing I do is support patients for disability and work accommodations because I can really make patients be successful if they get back to work in a graduated return to work program. So they may go and try to get back to work and it'd be too overwhelming to them physically, mentally, and they go 2 steps back and they'll never get back to work. But if I can get someone, okay, let's start you from working from home first. Let me start with you doing 50%. If it's a nurse, let's go Monday, Wednesday, Friday, not Monday, Tuesday, Wednesday night shifts. Then that is going to definitely make someone more successful in getting back to work. And so also, we have to have jobs that are going to be able to be flexible, this kind of work. Accommodations. And then I'll just sometimes do things like helping patients park closer, getting them, some mobility equipment, and just anything that will make it easier for them to get back. We know long COVID is a disability under the ADA, and so actually it's the number one thing right now that is getting to Social Security for disability is things related to long COVID. Like we said, I think the number I'd heard was close to 22,000, and they're still trying to figure out what to do with that. The other thing is we refer patients as much as possible to research. Research is really important, so always please, support research. I know that Senator Kane recently introduced a bill, the CARES for Long COVID Act. He has some mild long COVID symptoms himself, and so he wants to put more money towards research and getting treatments for patients who have long COVID. Again, definitely I work in a community-based approach and take care of patients, want to get them seen early, get on board, look at their social determinants of health, get them the type of appropriate rehab services that they need, and with a goal of getting them back to work as much as possible. So, thank you.
Thank you. Any questions from any of the speakers from the committee? Yes, Paul, go ahead.
Yeah, I had a question. First of all, the long COVID, these are still people that had COVID but have negative tests. So they're no longer shown that they have COVID. So it's not that they've had the virus in them all this time, right? So they're over the virus. The other thing, did y'all ever look at any of these symptoms that you described are results of medication that was given to them for COVID?
So a lot of the patients weren't it depends. The ones in the hospital were given medication. So is it possible? Maybe. But then the ones who weren't hospitalized, a lot of them didn't get any treatments.
Yeah, so no correlation as far as what you're seeing about treatment that they had, drugs they might have taken or not with the long COVID.
Right.
Okay, well, thank you.
You're welcome.
Any other questions? Yes, Kelly.
So when we talk about the labor market, and in particular our people like our first responders, police, fire, EMS, and we do not have enough people entering these fields. And most states have had COVID presumptions which expired, and after that workers, and in particular first responders, they've been denied work comp benefits. So my question to the first responder is this: did the number of reported claims include denied claims? And then my next question in general is, as we try to encourage more people to enter the labor force, and especially these critical first responder roles, has consideration been given to creating a model policy with a presumption that contracting an airborne pathogen like COVID is work-related? Because I think we can all agree that we definitely need people like our first responders and people that are up close and personal working with other people, and they should be given some due consideration. It may mean that more claims will be paid out, but it would also help with recruitment and retention as far as the labor market. So one question to you, sir, and then the rest, I guess, to the panel in general.
So I can speak to parts of that, and parts of it are well outside of my scope. But in terms of the claims themselves, the strong majority of claims across all industry segments were accepted. Most of the ones that were denied were actually denied because they did not have a positive test. So they submitted a claim, and they went and they got their PPR test, and it was negative. The second reason that claims were denied, and this again goes across industry segments, was because they simply weren't able to document the exposure. And that varies by state, because some states, as you know, had a compensability presumption that made that be irrespective of that, and some states mean that you could actually have to prove where their exposure could have been. So again, most of them were accepted. In terms of by industry segment, clearly the first responders were the ones. If you go back to the graph that I had, those first ones were almost all in the first responder or the medical space. Beyond that, how the industry is going to respond to it, that kind of gets back to my point in terms of, what's next. And those are, we're not a stakeholder. Insurance companies are not stakeholders. The injured workers are, right? And so how this gets responded to, we will just then work in accordance and act followingly.
Yeah, good. I had the same question. We see so much on TV and everything, but the first responders, especially nurses in the hospital, and how many are leaving the hospitals in droves because they're worked to a level, and what's the long-term effects of that? Could be really disastrous.
Yeah, and it's a very real thing. Labor shortage is hitting everybody, and it absolutely hits some of those areas first. And as we all know, that's where we can tolerate it the least.
I treat a lot of nurses, a lot of first responders, a lot of physicians, and some of them are not able to go back to work.
We've seen that. Any other questions? Brenda, do you have a question? You didn't. You're good? Okay. Thank you for coming. We appreciate it very much. The next, and actually the last consideration on the thing is the consideration of readoption of Model State Structured Settlement Protection Act, supported in 9406, 2011, 2016, 2021. I'm going to send it over to Senator Yuki. He has a couple of amendments we're going to talk about. And I think our thought is we might go ahead and get it reconsidered just for this meeting, that we can get it on when it should be, and then we can talk about the amendments at the next meeting. Go ahead, Senator.
Thank you, Mr. Chair. And yes, we will. I'll go over a couple quick things, and then we will ask to readopt until our July meeting. But we in Minnesota are working on this. We had announced that back at our November meeting. And the part we're working on is we took the current NCOIL language, and when I say we currently in Minnesota are doing this, and we're patterning it off of what has already taken place in Georgia, Louisiana, and Nevada, and others that are currently working on it, but those three have already acted on it. And that's the part we're working on that we would like to bring back as a offering for the July meeting to put before the members and see what they would like to adopt. And a couple of things that are in the new language that are in addition to the current NCOIL model affect the purchasers of these structured settlements, and that includes a registration and the requirement for surety bonds, so that we, the whole idea is trying to get away from the fly-by-night operations and protect all ends of this, but particularly the person or persons, what we would refer to as the payee that would be receiving the money and making this agreement. So that's part of it, and then we've got a prohibited practices private right of action section 2. So going into those items, that's where we're at right now. We want to bring that back here in a few more months and present, whether the group wants to adopt any or all of it, but we will make that offering and have it ready for July.
Listen, I appreciate that. And the models, everyone can see it. It's in their book at the last of your section. So if anybody wants to take a second to review the model, et cetera. Any questions for the senator or myself? Senator, can I have a motion? Yeah.
Better. I'll make a motion to adopt our current language and push it forward until our July meeting.
So do I have a second?
Second.
Okay, okay, that's fine. I have a motion and a second. Please, all in favor, say yay. Yeah. Aye. Any opposed? Sorry, anybody opposed? Don't think so. So the motion carries. Any other business to be brought before the committee today? If not, we stand adjourned. We're good? We're good. The next thing on the agenda, if you'll look, is the Institute Griffin Foundation luncheon, and I think the same place. They said same place as breakfast, and the topic is inflation implications for insurers and public policy matters. Should be very interesting in this and very crucial this day and age. Thanks everybody for coming.